What is going on, family? Covering over something that is super important. Before I dive into it, it's your boy Rigo checking in for another video talking about a market shift. If you guys don't follow me, follow this. If you haven't seen my other videos talking about different loan programs, what the market updates look like week over week, and just kind of getting an idea of where the real estate market is and where it's going, check out my YouTube channel, check out my videos and the prior videos, like them, share, subscribe to the channel. Once again, diving into it, we're going to be covering over market shifts. Why? Because a lot of people are saying the market's going to crash and we're headed for a recession. We are in a recession, fortunately, but I don't see a crash coming, and I want to show you guys different factors and different perspectives as to why we're still looking pretty healthy in the real estate market. So I'm going to talk today about pre-COVID, where the real estate market was, during COVID, where the real estate market was, and then post-COVID. And I'm going to give you some examples of my buyers and sellers during those time frames, so you see where they are and where they could have been in each situation, okay? And again, it's a market shift. We were in a seller's market. Just to feed you in a little pre-story here, COVID created a seller's market. It created a market where sellers were getting top dollar, selling extremely fast, rates were really low. So it was just a cluster of things going on to where now we're starting to see a little bit of a drop where the recession is coming in. It's really a correction in what we went through and what caused an outlier to go up extremely high when people thought it was going to crash. So stay tuned for it. Before we really dive into it, I want you guys to understand something that my mentor tells me all the time. Two motivating factors for human beings, guys. And this is something that is used in life. My boy Andy says, fear and greed are two of the strongest motivators for people. He doesn't say it in that exact context, but the context is fear and greed, guys. The media uses those, salespeople use those, your family uses those, your spouse uses those to influence you in different ways. So fear and greed are very important to understand about ourselves as well as the outside environment, okay? So going into it right away, guys, pre-COVID, this is pre-2020, for you guys to kind of have an idea of where we're at. Average dates on market, 25 to 35 days on market. About a month is what it took to sell your house, right? Which is average. Contingency periods. For those of you who don't know what a contingency period is, it's a law, a contingency timeline where you're allowed X amount of days to exercise your periods of contingency, basically inspection, appraisal, termites, things of that nature. You get to exercise those to make sure you're making a purchase that is protecting you as well, right? You're not just buying a house that's as is, the foundation's falling apart and you can't get out of the transaction. So contingency protects you, and it protects your deposit from an escrow, from a transaction you're able to pull out during a timeline, okay? If you haven't checked out my contingency video, scroll way down, check it out, share it, like it, thank you. So again, 25 to 35 days on average is what your house took to sell before COVID. You were able to access all of your contingency periods. So you could do 17 days, you could do 21 days for your loan and your appraisal to protect you and exercise that extra protection for you to make sure you're making a good decision and a good investment. There was no appraisal issues. Now, what does that mean? What I mean by appraisal issues, and I'll kind of elaborate when we get to the middle here during the COVID. An appraisal is when you, as the buyer, pay someone, in this case, someone who is hired by the bank, to give you a valuation of the property. They go out as a third party, no tie either to the seller or the buyer, and they essentially give you a valuation for what they believe the property is worth based on a half a mile to a mile radius from the home. Characteristics, bedroom size, bathroom size, square footage, lot, single story, pool, so on and so forth. Based on that evaluation, you can now negotiate. When you had your contingencies, the seller didn't have any power, because you still had this period where you can cancel out and the seller loses out on that deal. So what would happen is the seller would have to reduce the price in order for the deal to continue to move forward. Either way, as the buyer, you're protected because of these contingencies. Now, the crazy thing that happened, COVID happened in 2020. COVID happened. A lot of people said we were going to crash, and guess what? One great thing about COVID is within a 2.5 year span, real estate increased 36%, guys. Year over year, we went 12.5% basically year over year within the last 2.5 years, guys. It's crazy, insane. If you guys, I have a post coming out for you guys. It's basically showing what COVID created. Huge increase in real estate. And the reason the recession is coming kind of down now is because we're coming down from this high and we're settling back into the normal 3 to 5% year over year equity increase, which is normal. It's a normal market, what I've been telling you guys from the beginning. Okay? I'm gonna slow it down for you guys, but I want you to understand these contingency periods because it's very important on how it protects you and how we were screwed during COVID, right? The last one is the interest rate, which a lot of you guys follow. For some reason, you guys think that the interest rate affects the real estate market. It just affects the buyer pool. That's what it does. If people are buying, which a lot of people still are purchasing, investors are going to purchase regardless. I had a client who was a referral friend. He purchased his first property at 12.5%. And he laughs when he's like, people are scared to purchase properties right now. He laughs because he knows it doesn't matter what the rate is, as long as he's comfortable with his mortgage payment. He wants to invest into real estate for the long term. That's the game, okay? That truly is the game. Investing in the long term and leveraging those assets to purchase more, okay? It doesn't matter what price point you buy in. Genuinely, if you're gonna keep it forever, you use the money that you build, leverage, and buy another, right? You purchase, get a little equity, take it out and buy another. So you'll always have a little bit owed on one of them, but you're continuing to grow. There's an end game. Everybody has a different plan. That's another video, guys. But again, 30 days average on market. You were able to exercise all contingencies. You didn't have any issues with your escrow falling out and losing your deposit because you were covered with these contingencies. And the interest rate was between 4 and 5%, roughly 3.75 to about 5% is what it was before COVID. During COVID, real quick, I put 17 days here because that's the average based on the entire market that is showed. However, houses were literally selling, guys, in a day. If you put it on the market during COVID, literally in a day, you would have 20 offers, a line outside the door. It was crazy. I had one client, Anna Mendoza. She follows me on Instagram. She can attest to this. We literally went a year and a half straight looking for a property everywhere. And she had no luck because she was in a price point where there was 20, 30 offers. Houses were selling so fast you couldn't do nothing about it, right? People would rather overpay than worry about an interest rate. It's crazy. But either way, they understand that real estate is one of the most powerful investments, okay? So 17 days was the average. It was really selling in like 2 or 3 days. Your house was gone. Contingencies I put were non-existent. What I mean by non-existent is simply you were offering, and again, you guys, Anna Mendoza can attest to this, and a couple other clients. When you wrote an offer during COVID, there were no contingency periods. So if the house was worth $450,000, we were offering $20,000, $30,000, $40,000 over what it was actually worth, and the buyers were coming out to pay the difference. So it wasn't a negotiation of, oh, it's not worth what I gave you. You got to drop the price or I'm going to cancel. Now it was like, I have to. I'm committing to giving you these extra $30,000 and I know that I'm overpaying for it, but I want to get in now. I want to lock it in now because the rate is low, right? Either way, this was crazy. This was extremely crazy. People who locked in a great rate, of course, are going to be there for a long time. Most people don't know that they're dating their rate. They're not going to be with that rate forever. They're going to date it, leverage it, continue to move forward. But again, at that time, the rates dropped to like 2%. At one point, I saw a 1.99 interest rate, guys. It was insane. Just absolutely insane. But again, you were running into the issues of people falling out of escrow, losing their deposit because they had sometimes the appraisers were coming out lower and they had to cover the difference. So it was maybe $5,000 of more of what they expected. And people were, fortunately for me, I protect my clients, but people were really falling out of escrow and they were losing $20,000, $30,000 deposits, guys. In my lifetime, I've never lost a deposit and I don't plan on doing it. I protect my clients and I also know my markets very well. So I don't put you in a situation I wouldn't put myself or my family in, okay? So check back into that. 30-day average, this was really like a week. This was insane to be doing this, but we had some back end kind of safety nets that protected our clients when we ran numbers and we kind of appraised the property pre-offer. And then the last one is going to be post-COVID, right? So now, what we're looking at today, I just posted a market update video yesterday talking about the last 4 weeks, basically once everything really started shifting, week over week, where the properties have gone, price, dates on market, how many houses are active, how many new listings have come on the market, so on and so forth. And guess what, guys? We're back. We're normal again. We're back to 27 dates on market. That is the accurate number as of yesterday, right? 27 days on market. We are accessing all of our contingencies, all of them. There are no issues with falling out of escrow, losing your deposit, nothing. Absolutely nothing is coming up right now when you're in escrow. It's actually to the benefit of the buyer right now because people are scared. So we're even able to negotiate, and I'm going to add this one in there, closing costs. It's not a guarantee. However, it's now a topic we can bring up when we negotiate. I totally forgot to put you guys on my mic. Hopefully it sounds great. I don't edit. I just post. So the value is there for you guys. Again, dates on market 27. Reason why I put it up, we're back to a normal market, guys. Contingencies, are we allowed access to them again? Absolutely. So the buyer's protected. There are no issues with escrows. Rates are between 5 and 6% right now. We're back to a normal market, guys. I continue to reiterate this. I don't know where the market is going. I really don't care where the market is going because either way, whether you invest now or later, historically, real estate has proven from the beginnings of time, every 10 years, you're always in a surplus of equity. Always in a surplus of equity. And you always take out and leverage and buy others. Or other people take it out and they fix their house and do others. If you want to build wealth, you got to leverage your money. Anyways, again, no issues in escrow. We're back to the average rate of 5 to 6%. We're a tad bit higher than we were before, but we're right there. We're literally right there. The dollar amount in mortgage payment doesn't change much there. And you also get closing costs, guys. So again, do not let people scare you. Most important thing for you to know is this. What are you pre-approved for? How much money do you have to play with? Where are you interested in going? And how much money would you like to pay monthly? Whatever you're comfortable making, that's what you want to focus on. Because the real estate is always going to be there and you can always do a lot of things with it. Whether the prices drop, you're getting a 30-year fixed rate, your mortgage is not changing. Your taxes may shift a little, couple dollars, couple 20, 30, 40, $50 is what I've seen. Some 10, but it's very little, and that's based on the valuations continuing to rise. So if the prices drop, your taxes won't increase, right? And if you're not looking of moving, if you're not a flipper, if you're a purchaser, someone who's building wealth, you're going to purchase property, you're going to hold on to that property, and you're going to leverage to purchase more. Okay, guys? So don't let the fear and greed push you to make a bad investment decision. Use it as leverage. The reason I made this video is to show you guys that we're shifting back into a normal buyer's market. Sellers' properties are sitting on the market a little bit more. They're more willing to negotiate. Some of them are coming back down from unrealistic expectations, and they're coming and settling back down into what is a normal market. They're willing to negotiate. They're willing to allow contingency periods. So I think it's very important for you guys to understand where we are, how to take advantage of it as a buyer, getting some of your closing costs covered. Some people can go up to 15 grand in closing costs. So I'm talking a little bit, but I want you guys to really understand this, guys. The market is healthy. We're back to what is normal from what was abnormal, which pushed us and drove us really, really, really high during those times. Okay? So understand that. If you guys like this video, follow me on Instagram, follow me on Facebook, subscribe to my YouTube channel. It's my first and last name, Rodrigo Castellanos Jr. Check it out. If you guys don't have any other questions, please share this video. Please like this video. If you have questions, comment below. I want to ask you guys for more topics. I want to see what you guys are thinking from the consumer side on to the, I consider myself a professional, and figuring out what we can conversate about, what we can talk, different breakthroughs, maybe myths, other questions you may have. I would love to hear it, guys. Thank you so much for staying in tune. Peace.